Hey, what's up, you guys? Welcome back. In today's video, I'm going to go over Ethereum Classic. Right now, we are trading at $27.50. 24-hour volume, we're down 26.63%, and market cap, we're down 2.26%. So heading over to our chart, I'm going to cover over weekday and then immediate short term for 2 hours. I'm going to try and make this video as short and sweet as possible. So if we take our course action on a week here, we can see that our RSI is down at 0% for our K line, and our D line here is at 12%. Now, keep in mind, before we see a price increase or a price, a pullback here is essentially when we're at 0 and 0. So even though we are considered to be oversold here at the line at 0 and 12%, price can still continue to come down as the RSI still hasn't given us that confirmation of a buying opportunity in different time frames. Now, again, when we take a look at this candlestick here, we can see that the pressure itself is mainly at the bottom, which doesn't give us enough hope where price is going to come up and try to break through key areas of resistance. As again, the price coming down, we retested this area of support of 78% of our fib at $26.80. We're going to hold on this area for support, but not only that, we see roughly around February 28th and then May 2nd weeks, we have actually came down on a low of $26.11. So again, that price area, this zone area of support, we have been able to retest it from these two candlesticks from that week. Now, as we can see, again, the pressure of the sellers is pushing the price really low. We can see we are close to our 20 moving average. And if we do close below this, it's going to change the overall trend, which is this bull trend as we are above that moving average. Now, as we are coming down, and I know we are going to come down just a little bit here, we can see our MACD indicator here is getting lower in the bars, getting lighter in the color. So it is showing us that the trend may be over. That's only if we do see from green turn into red, and that's only on a weekly time frame. So it's going to take some time here to take a look and evaluate this as well. So going into a daily time frame here, I'm going to zoom in so it's a bit easy to see. As you guys can see at the very top here, our RSI itself is coming down as the price itself is retesting a key area of support. Now our support area is around the $26.53. We can see a note that's sticking out here a little bit long, but not as much as the supply and demand zone of our volume profile off to the side. As price is coming down, we're at 0% and 19. Again, keep in mind for our daily time frame, we can see RSI drop down to 2% and 12% before we see the price pull back and retest an area of resistance. I'm going to zoom out here and see if there is any areas of support that we could rely on. And we can see already this yellow line, a few candlesticks over here in May and a few more here at March. But we are going to be relying heavily on the 78% here as we are retesting our support. Our MACD indicator shows us promising indicators from these bars getting simply smaller and lighter in the color. So it may show us that the trend may be over here, okay? However, we can see, again, we are retesting the support, and the more times we retest the support, it is going to weaken that level of support, and people may not want to buy at this end. They may want to wait until the sellers drive the price even further down. Again, as we can see, the RSI may be considered oversold, coming down to an area of support. If we do flick from the red to the green, we're going to hold this support very, very nicely, and depending on how strong the momentum is, may break through the next of our fib at 61%, which is $29.95. All right, you guys, over to our 2-hour time frame here. I wanted to show you just quickly a mild bearish divergence. And what a divergence is taking a look at an indicator. And basically the indicator here for our RSI is showing that the RSI is dropping in the slope. So we'll see here at 100%, and here at this peak is 96%. However, on the actual price chart, we see the complete opposite. So at this peak here, I'm just going to use this. So this price is, or RSI is coming down. So at this peak here, the price where we find it is right here. Okay. And then at this peak here at 76%, where the candlestick is, it's slightly above. So we're seeing the RSI drop down. However, we're seeing price action come up. These differences here is a divergence or a hidden divergence, and it's basically showing us we are going to, this type of divergence is a bearish divergence, okay? As we can see that the RSI is dropping down, we can anticipate that the price is going to drop down to an area of support. The momentum we see is very, very small. Momentum from these three candles, we are getting very small histograms over these bars itself, getting lighter in color. We barely even moved or even tried to retest the next fib at 27.97. So price itself is going to come back down. And as we can see, there's really not much to go on except for these candlesticks down here. Again, depending on the current, if we see from green to red at an area of our next fib at $27.38, then we are most likely going to come back down. I'm not going to say that we are going to come back down sharply at the $26. We may dangle at the next area of support, which is roughly around the 27.22 area. We can see a few candlesticks coming down to this area, this candlestick here on September 23rd, depending again on the momentum and the trend itself. One of the things too that I wanted to show you in a 2-hour time frame is the gaps that we're seeing. So we see a gap here, we see a gap here, here, and most importantly, we see a gap up here. So these gaps move, basically the price is moving so quickly in these gap or these time intervals, there's left liquidity in here. That means left orders in here. Essentially, it's a price correction that will occur in the future. So what we may anticipate is price again coming back down here to fill this left liquidity. If we can see in this action here, this gap was basically filled by these orders here, right? So if we see here, there was another gap. There's so many gaps here. This candlestick filled these orders here. Okay, as price is coming down, here is the gap of left liquidity that the price is going to fill. And that's essentially where I'm thinking price is going to land in, is roughly around the $27 area here. Again, this is pretty exciting too, as this gap occurred at the very top here. We are going to evaluate and see if we are going to fill this liquidity, because it is quite high in our fib chart at the 38%. But not only that, it's above our 20 moving average and it's above our 50 moving average. So that's what I wanted to show you. Sorry guys, I did want to keep this video very, very short and sweet. However, I didn't. But if you did enjoy the insight that I gave you here for Ethereum Classic, please smash the like button. It does help me a lot. Also subscribe to the channel and comment down below. But I'll see you next time.